Hey traders, Raghee here, and in this update we're going to talk about something that's probably going to become a lot more pertinent in the next 2.5 months. And the timeline that I'm talking about is a macroeconomic timeline to a lot of the uncertainty that we're dealing with right now. And number one is something that everyone's talking about right now, which is when are the next rate cuts coming? And September is still probable, but not still a highly expected plus 80% reality. So there's a big question mark hanging over that. The next question is going to be, who is going to be the head of the FOMC? That was something that rocked the trading session today on Wednesday. And so we have all these macroeconomic uncertainties. And if you know how to weather these monetary policy cycles and some of these macroeconomic and sometimes even news-driven storms, most of you will know the way that you do that, the way that you take this kind of volatility and make it an opportunity is to have a long-term approach. And that's exactly what we're cruising into. This month, we're going to have probably a fairly sedate end of month FOMC meeting where there is no rate cut expected. We go into the August Jackson Hole Symposium. That could be very much an interesting meeting, as now the conversation is how quickly and who is going to become the new head of the FOMC. If Powell is out, that's going to create a lot of volatility, because while a replacement for Powell would probably be someone who is handpicked to be more dovish or favor lower rates, which ultimately be bullish to the stock market, okay, that's a little further down the line. But in the interim, it's a lot of what the market absolutely hates, which is macroeconomic uncertainty, right? And in uncertainty, do people buy or do they sell? Well, you know as well as I do, we watched it live intraday today, they hit the sell button. They hit the sell and they run away. That is an opportunity if you're a long-term player. So right now in this season we're in, and we're going to deal with these seasons repetitively. If you know how to take advantage of it, you're going to build a portfolio like this. Now, this is the Sector Secrets Mastery Long-Term Growth Portfolio. Call it active investing or long-term trading. It doesn't matter. These are opportunities to buy low and sell high. And let's really talk about what we're doing. Buy low, sell high. And every one of these are positions that were alerted to members and that we've got in this long-term book, either via shares, which is my preference and probably what I do about 80% of the time. And the other 20% of the time, I'll buy the shares and I'll look at leaps. And this is where I have a long-term thinking of, when I'm buying the shares, of 6 months to years. And when I'm looking at leaps, I'm usually in the window of about 12 to 18, depending on the strike. I might go out to 24 months, but usually it's going to be in this window of 12 to 18 months for leaps. And again, this is a long-term portfolio approach. I'm using the natural drift of time to my advantage, because historically, this is, by the way, the S&P via the SPX, there's always a reason to sell. There's always a reason to panic. And yet, look at the overall drift of the stock market, which, by the way, are at all-time highs, which this cutoff was, last year, 2024, I believe, is what this image is from. And this is from Koifin, by the way. This is from last year. We're at all-time highs in the NASDAQ and the S&P right now. There's always a reason to sell. There's always a reason to panic. But what if you could take advantage of every one of these fairly regular panics, and instead of panicking, you build a long-term portfolio? You know, one person's market crash is another person's treasure, right? One person's crash is another person's treasure. And I look at it as, how do I take advantage of these moments where I can scoop up some treasure? All right, so a couple basic things to think about. Number one, the greats, Stan Druckenmiller. If you don't know who he is, Google him. He's the GOAT of basically longer term trading. For 30 years, he's averaged about 30%, okay? Take a look at Warren Buffett. Take a look at any of the greats with that long-term mentality. This is where they're at. Now, that's impressive, because the S&P usually does give or take about 10.5%. right? The chart I showed you was 9.65% return annualized. But what if you can do something like 30%? What if you can take something that doesn't need a lot of time? It doesn't need a lot of babysitting. It's not something you need to look at every day, maybe once a week. Set some alerts and let that drift of time work in your favor. You're going to do what most people don't. Most people micromanage. Most people overactively manage their longer term portfolios, and they're not able to get returns like Stan Druckenmiller. Well, we are, right? What we're doing is taking all the things that I've learned as a trader and applied them to a longer term account style, where we look at weekly time frames, and I'm building trades that I can hold for months, if not years, whether that be shares or whether that be leaps. Now, if you think, okay, Rag, shares, you may not have caught my attention, but if you're talking leaps, that's something I can wrap my head around, and that's something I would love to put in a long-term growth type account. Tomorrow, Thursday, at 7 p.m. Eastern, so it's at 7, not 8, as I normally do. At 7 p.m. Eastern tomorrow, Thursday, I'm going to be doing part 2 of a longer-term growth discussion where we're going to get into more examples from the current portfolio as well as the details on the leaps. A lot of you have asked me, Rag, I'm not going to go buy hundreds and hundreds of shares of a $200, $300, $400, $500 stock. But I would love to take advantage of the leaps, these longer dated options. That's exactly what we're going to do tomorrow at 7 p.m. By the way, what's the total return on this portfolio that was begun with the Sector Secrets Mastery long-term account growth? September of 2022. Since then, total return is actually just about, I think this is a little higher than I thought. It's 116%. I thought we were up about 110, a little bit better. And then if you want to look at the 1 year annualized, there's the number. So if we can get or beat 30%, gang, you're doing better than most hedge funds by usually about fourfold. You're doing something that we look at only the greats doing, and yet what they're doing is finding high probability names and giving them time. And there is a way in which we want to time these entries. There isn't a way in which we want to find the stocks that are likely to do this. And I'm going to get into the process that I've been using, frankly, for over 3 decades, and I've been teaching members since mid-2022. Yes, we have a room open for this. So if you want the kind of alerts that I'm sending out to build portfolios like this, you definitely want to join me tomorrow at 7 p.m. But come check out the webinar. You can register for it at simplertrading.com/long-term-growth. You don't need to buy any indicators. In fact, the indicators that I use to build this account are free indicators. We'll talk all about this on Thursday, and I will see you then. Remember, we could be coming into that macroeconomic storm. I don't want anyone panicking. The smart folks are going to see the opportunity, and I'm going to show you how to recognize those tomorrow.